Okay, so silver has been on a pretty incredible run recently, from a low of under $12 per ounce in late March, all the way up to around $22 at the time of recording. And you're wondering if the opportunity is gone, or if silver could instead continue climbing further. So I'm going to break down the arguments both for and against why silver's price could keep rising. And we'll talk about whether you need to buy physical silver or if investing into a silver ETF is sufficient. Once we've covered everything, you'll have a better idea of what's going on. Now, obviously, I'm not a financial advisor, and my only intention is to present you with the facts so that you can make an informed decision. So let's get straight into it. For many investors, silver plays a similar role in our thoughts as gold. Both are seen as a hedge against inflation. So if you think inflation is coming, you'll often take a portion of your overall money and invest it into both gold and silver. For me, I like to describe silver as an insurance policy because silver tends to perform well when people fear inflation. Silver also tends to be not too correlated to the stock market when crashes occur. And silver often excels when the economy tanks. So if I fear the times aren't looking as bright in the future as they have done in the past, whether that's because of inflation, a struggling economy, or a potential stock market crash, I might begin to move a portion of my money into silver. So over the past few months, the economy has taken somewhat of a battering, and central banks worldwide are printing so much money, they're really playing a risky game with inflation. Also, the stock market performing surprisingly well during this time has many investors concerned that another crash could be coming. Well, when you combine all of these factors together, it's not a surprise that silver has performed so well in recent times. So we're going to kick it off by looking at the arguments for why silver could continue rising further. But don't skip over the arguments against, because we really want to try to be as neutral and balanced as possible. But anyway, let's begin with these arguments for. Well, the Federal Reserve, the USA's central bank, has printed more money during 2020 already than they did during the entire 2008 economic meltdown. And as noted, interest rates in many countries are at or below zero, which is another key ingredient for any bull market in precious metals. So what we have is the central banks globally, and it really is global, it's not just the Federal Reserve, they're printing large sums of money. And that's happening at the same time that interest rates are around or below zero in most countries. Both factors are very bullish for the price of silver. But we kind of already know this. This has been going on already. So the question is this going to continue forwards? Well, the Fed has come out and said that they'll do whatever is necessary to support the economy. They've also said that they aren't a fan of negative interest rates, and they don't really want them to go that low. Well, if they're willing to do whatever is necessary, but they aren't willing to do that, it looks like heavy bouts of quantitative easing is the approach that I expect they'll be taking. And that is, of course, bullish for the price of silver. Also, while silver and gold are considered similar by many investors in that you could describe them as insurance policies or hedges against inflation, there's actually a large difference in their usage. You see, gold is mostly used as an investment, while 56% of silver's use is in industrial purposes and only 44% for investments and jewelry. As noted, silver is used in nearly every major industry, from electronics and medical applications to batteries and solar panels. Silver is the best conductor of electricity, making it very difficult to replace with other metals in many usages. Take solar panels, for example, which account for about a fifth of silver's industrial demand. A report by consultant CRU last month expected solar power to grow at a compound rate of nearly 10% for the next decade. Democratic presidential candidate Joe Biden's $2 trillion plan to green the energy and transport system implies a lot more solar panel demand. China, already the world's biggest solar power market, is likely to increase installations this year, even given the difficult start to 2020. On top of industrial demand factors, we should also consider the gold to silver price ratio. So essentially, gold and silver are highly correlated, which means when one is rising, so is the other one. And when one is falling, so is the other one. I mean, it's not a perfect correlation, so it isn't always like that, but they do tend to follow each other pretty closely. Now, investors use the gold to silver ratio as an indication of which one out of gold and silver might be cheap and the other one might be overpriced in comparison to the other. So as the ratio rises, it means that gold has become more expensive in comparison with silver. And that is often taken as an indication for investors that now is a good time to buy silver compared to gold when it's comparatively cheap. So let's take a look at where the ratio is today. This chart shows us the past 50 years. The ratio is currently sitting above 80 to 1, while the historic average on this chart and across the 21st century is actually closer to 60 to 1. Again, this means that silver is currently cheap compared to gold, at least based on historical factors. Now, if we zoom in, we can see the past 3 months. When I published my previous video on silver on June 19th, the ratio was in the high 90s, and I referenced this as a potentially bullish factor for silver. As we can see, the ratio has dropped since then, which means silver has been gaining on gold. If we zoom back out, however, we can see that even with this drop, the ratio doesn't bring us back to historic normals, and so this could still be taken as a bullish signal for silver. Also, let's consider supply. Supply side factors are also supportive, with output generally trending lower. Silver is usually a byproduct from mines that primarily dig out base metals or gold. At a time of tight exploration budgets, it's hard to see the world's miners bumping up exploration on the off chance of finding some silver. In the meantime, COVID-19 continues to disrupt operations at some of the world's largest mines in Peru and Bolivia. Okay, so we have demand looking strong, with fear of inflation and concerns surrounding the economy and potentially the stock market too. Supply may weaken, and that's obviously a bullish sign. And of course, the high gold to silver ratio looks bullish for silver too. But we can't just consider the positives. When you're investing, you'll nearly always find arguments that back up what you already believe. If you really want to test yourself and come to the right conclusion, you have to find the arguments against what you believe and ask yourself honestly, when you analyze them, is there validity to the points that they're making? So let's look at some arguments for why silver might fall in price. Let's start with how rapidly the price has risen in the past few months. Now, is this based on a valid macroeconomic view of the world? Well, yes, of course it is. We already know that central banks are printing large sums of money, interest rates are at historic lows, and neither of these are really likely to change anytime soon. But does all of that mean that some people won't take profits, at least in the short term? Well, of course not. When any investment increases so much in a short time, there is always a chance there could be a pullback as investors look to take some cash off the table. Also, there's a chance that some of the world's largest investors may turn to gold instead of silver if they want to hedge their bets. And no, I'm not talking about investment banks, I'm talking about the much larger central banks. Central banks store gold as a foundation for their national currencies and have recently been net buyers, increasing their gold reserves. However, this researcher couldn't find any consolidated published central bank holdings of silver as a reserve. In fact, he had to go back to a 1923 report to find a time period when central banks viewed silver on par with gold as a reserve. You could also argue that silver being used in industry could be a concern. As the economy suffers more, industries will likely slow down, which could have a negative knock-on effect for the demand of silver. As noted, there are the customers who set the price and their demand is variable. This means that the byproduct phenomenon is a two-edged sword. Miners might not be able to raise output to meet higher prices, but nor can they really cut it when the market swings to a surplus, as all industrial commodities eventually do. Also, what often happens when the market crashes is that both gold and silver will sell off alongside stocks, and then gold may start moving upwards a bit of time after this, and then silver will follow suit sometime after. And therefore, it could be argued the fact that silver moves with something of a lag to gold has the consequence of attracting bids from investors who have slept through the gold rally and now have a severe case of FOMO. These are not generally convinced bulls, and they are susceptible to getting out of the trade at the first sign of trouble. Now, I don't really agree with this, and I don't love the wording of this, to tell you the truth. The fact that silver lags gold in the market recoveries is pretty well documented. And so it's not just some random idiots that are making this trade, it's actually some extremely smart traders. However, to be fair, it is more of a retail market, silver, compared to gold, and as a result, people in retail markets tend to be more susceptible to making rash decisions when there's volatility, and as a result, that can cause even more volatility within the market. Now, do you remember the point from earlier about silver demand rising because a report by consultant CRU last month expected solar power to grow at a compound rate of nearly 10% for the next decade? Well, this is going to make you laugh and probably cringe at the same time, and I've included it for a reason. Later in that same article, they referenced a study by consultant CRU published last month, which estimated the demand from the photovoltaic industry may have already peaked last year and will likely run around 20% lower for the next decade. Amazing, right? I know this is just ridiculous. And this right here is the point. You can easily pick out any stats to back up your argument, because the truth is nobody really knows where the price of silver is going. I've shown you the arguments for why the price will increase, and I've shown you the arguments for why it won't. But nobody really knows. If you were to put a gun to my head and ask me to speculate, I would say that maybe a pullback could happen in the short term. In the long term, with central banks printing so much money and the risks to the economy and the stock market, it looks like we could be set up for a time when silver continues rising further. But I have to be humble and acknowledge that I don't really know if I'm right just because I think something. In the short term, I really certainly don't know. Nobody does. So why am I interested in silver then? Why did I discuss investing into it around a month ago in a positive manner? And why am I still positive on it today when my outlook is long term for the next few years? Well, if you're a regular viewer, I think you know where I'm going with this. Of course, it's because I think diversification is a good idea. Diversification is where you invest into lots of different investments, and ideally ones which aren't too correlated to each other. And the reason you diversify is because you hold your hands up and say, I might be wrong about silver. I might be right, I don't know. I might be wrong about the stock market. I also might be right. There's a good chance either way for both markets. Well, by putting your ego to one side and acknowledging there is a chance you could be wrong, it means you realize that it probably isn't the safest approach to go all in on something. So maybe going all in on the stock market isn't the safest strategy. Maybe going all in on gold or silver isn't the best idea either. By holding a combination of investments, it means you're less likely to suffer if any single one of those crashes. Now, the question is, does it make most sense to hold physical silver? Or is buying an ETF on the stock market sufficient, which simply tracks the price of silver? Some of you watching this are prepping to comment angrily if I don't say that physical silver is the only way. I know you're waiting to comment. Well, I think holding physical silver does make most sense if you can store it safely and can maybe see a future where you could see yourself buying physical goods with that silver. If, however, you're worried about losing your silver, whether that means you're clumsy or you're worried about someone breaking in, or you already hold most of your investing money in an investing account with tax benefits or something like that, then buying a silver ETF could work for you. At the end of the day, it really depends on your personal situation. Some of you will feel like holding physical silver is the only way, and I totally get that. Others will be happy with just getting exposure to the price and not having to worry about looking after it yourself. It's not my place to tell you which method suits you best, but I would recommend that you do some research yourself. If you've enjoyed this video, make sure to check out this one up here. Consider subscribing if you haven't already. And of course, thank you for watching.